Michael Fox, and this is the Prospector Podcast. And I have joining me today a brand new guest. I have Tim Crossley. Tim is the president and CEO of Adyton Resources. Welcome to the pod, Tim.
Thanks, Michael. Glad to be here.
Yes, this will be an interesting pod for people. We're going to be touching on some new geography that a lot of them may not be aware of. But before we get into that, Tim, let's give them the quick overview of the company and what you're doing and where you're doing it.
Sure. So company is Adyton Resources, listed on the TSX Ventures exchange. I'm Australian, operate the company predominantly based out of Brisbane, but all our projects are in Papua New Guinea, which is just north of Australia. We have projects on 2 island locations, so we're a little bit different, I guess, to some of the other companies that are operating in PNG, some more familiar names like the Porgera operation. Our projects are island locations, and I can go into a bit of that later in this discussion around what we see as the advantages of that. But we've got 2 island locations, 3 tenements, 2 of which are being advanced into production. They're very advanced exploration projects, probably had well over $20 million US, potentially well over $30 million US spent on them. And we're taking them through permitting and pre-permitting activities through and with our joint venture partner. And then I guess our flagship project is the Feni Island project, which is located between Lihir and Bougainville. Those are locations that people might be familiar with.
Okay, let's talk about Papua New Guinea. It's not a jurisdiction that people in North America hear a whole lot about. It's kind of off the coast of Indonesia, as you mentioned, north of Australia. So, you Aussie miners are a little bit more familiar with Papua New Guinea, but let's give everybody kind of an overview of the history of Papua New Guinea and its mining background and why it's actually a good and profitable jurisdiction for people to operate in.
Yeah, sure, Mike. Look, just by way of a bit of background on the country, I mean, PNG was a former British colony, largely administered by Australia. Got its independence in 1975. Operates under, Westminster system of government, so British system of government, British law. It's a democracy. I can't remember exactly how many prime ministers PNG's had in that time, about 6 or 8, but they've all been elected through fair democratic processes. So I think that works well. On a G-to-G basis, PNG is very, very closely tied with Australia. Australia, since independence, has provided a lot of budgetary support to the country, and particularly through the COVID years. The Australian government really stepped up and assisted PNG. And, many of the projects that we see from a mining perspective were probably initially started by Australian juniors, not all of them by any stretch. In fact, there's some very well-known Canadian juniors that have had remarkable success in Papua New Guinea, K92 to name one. But it hosts some of the world's greatest precious and base metals mines. If we want to talk about, Ok Tedi, formerly owned by BHP, now owned by the state. Porgera, 50-50 joint venture with Barrick and Zijin. K92 I just mentioned, and then obviously people would have been familiar with the Bougainville Panguna operation, which is actually on the islands, on the eastern islands of the PNG island economy, if you want to call it that. And then I guess, Mike, more recently we've seen the development of PNG's substantial gas reserves. So Exxon, Total, the Australian company Santos are all part of that project. It was a very substantial and material investment for PNG. I think at the time, the Exxon investment in PNG LNG was mooted at about $19 billion. I might be not quite right with my numbers here, but represented, around about 25 to 30% of PNG's GDP at the time. So, and it's been a very successful project, and we're seeing activity from both the senior partners there, being Exxon, well, all three partners actually, Total and Santos, looking to expand that facility and bring another pipeline from the gas fields and build another couple of LNG trains. So, I think it's been a good jurisdiction for a lot of companies. It's geographically challenging. Logistics is probably challenging in PNG, and that's kind of what drove us to keep our operations as island-based operations, where you can access on barges or boats easily, and you're not having to traverse mountainous country and do all your drilling through helicopter support, etc. But it's still a poor country, and it's still a developing country. So as a project developer, you need to be often developing a lot of the infrastructure that many people in the Western world would just take for granted as part of your project development initiatives. So, but again, I think being on an island is actually favourable for that as well, and is repeating myself a little bit here, is one of the reasons why we've been quite singularly focused on just doing projects on the islands. So I've been offered many projects in the PNG Highlands and have declined them. Primarily because of the challenges of the logistics of doing projects in the Highlands.
Okay, so PNG has got a combination of coastal islands and mountainous areas, and you're saying that it's easier for companies that are working in the coastal areas than in the mountains. From a social standpoint, is the local population in favor of resource extraction? I guess it's good jobs for them. It's going to provide them with infrastructure. Is there any negative pushback that comes from the local population there?
I believe the Papua New Guinea population is very familiar with mining. It's been a huge part of what's driven their economy for many decades. Through some of those operations I mentioned before have been operating now for over 30 years. And I think generally speaking, the population is very supportive of it and understands it. But it's like any country, and this is not unique to PNG, you still need to make sure that you bring particularly your local people along with you on the journey. In Papua New Guinea, I would say the most important people in terms of your stakeholders is your immediate community. If the the authorities, the Mineral Resources Authority, who are the permitting authority for mining, see that you've got support from that community, your permitting process will be straightforward. If you don't have that local support, they'll sit back and wait until you demonstrate that you will get that local support. So, I think the permitting process in PNG and also your in inverted commas your social license is not too much different to anywhere else in the world, other than we probably learnt from what happened at Bougainville, where it was a permitted project, it was operating, but over time that project lost the support of its local stakeholders, and then we saw them step in and ultimately Rio Tinto had to shut down that asset. So you absolutely need to make sure, and I spend an enormous amount of time in country talking to my local stakeholders, updating them on a quarterly basis. Every time we put press releases out, I will go around to our local stakeholders and explain to them what this drill result means, and keep them informed. They just want you to keep them informed. If you don't keep them informed and leave an information vacuum there, people will start making up all sorts of stories. So it's kind of 101 stuff, but some people just don't do it.
Yeah, no, unfortunately, common sense sometimes isn't common in some people, but it's good to know that. As I say, it's not a jurisdiction outside of K92 that people are particularly familiar with. So let's move on from the jurisdiction. Let's start to talk about Adyton itself. Now, you have 3 properties and projects in Papua New Guinea. So let's roll down the roster of whereabouts they're located and at what stage they're in, what's been done for the past year, and what does 2026 look for that project?
Sure. Look, I'll start with our Ferguson Island projects. Which are in the Milne Bay region of PNG. I mean, some other names people may be familiar with would be Missima, the Missima project, which was successfully operated by an Australian company for 15 years until it exhausted its economic reserves. And Woodlark Island is a project that's owned by a company called Geopacific, which is kind of a neighbour of ours at Ferguson Island. So we've got 2 tenements on Ferguson. We've got Wapolu and Gameta. They're about 30 kilometres apart. They're unlikely to be your next Lahire or your next Porgera. If I think about sort of the scalability here of these projects, where we've currently got 700,000 ounces, I think based on our understanding of the geology, the open nature of the resource, particularly at Gameta in a down strike direction and a long strike direction, I think those resources are expandable to probably 1.5 to 2 million ounces with additional drilling. But they're well drilled. The resource we've got there now is well drilled. Gameta's already at an indicated level with some of its resource. And Wapolu was a former operating mine in the 90s, which was shut down. So Wapolu comes as a brownfield restart and is the one that we're targeting to get into production first. And that's not because we like the resource better than Gameta or anything like that. It's just simply because it's a brownfield restart. It brings with it legacy infrastructure that we're refurbishing, like wharf, airstrips, tailings impoundments, even some of the structural infrastructure is actually in good condition. So that's our kind of first targeted operation to get back into production, the restart of the Wapolu project. And the other point about these 2 projects, Mike, that I probably should have mentioned a little bit earlier in the discussion, is they are under an earn-in JV. So Adyton shareholders are carried by the JV up to first cash flow at the project. So we don't have any drag on our balance sheet on these, but we do dilute at the asset level to 50%. So we're carried, we dilute to 50%. We then are a 50-50 JV partner. And just for the avoidance of doubt, when I mean carried, we literally are carried from a perspective as there's an earn-in component to get the projects to fully permitted, and then our JV partner's parent company provides the JV a soft loan for the capex to construct the projects and build the projects at an 8% interest rate. What that that actually puts Adyton in an amazingly enviable position in that we don't have any drag on our balance sheet. From an NPV perspective, you don't see that huge negative cash flow, which is obviously a huge drag on value for Adyton shareholders. And, we're looking like we're in a very nice gold pricing environment for a while to come. And further to that, those that have been watching our stock would have seen that today we announced the first of our letter of intents to sell offtake to a trader, and that's a very positive move for us. It's positive for our shareholders from the perspective also that the payabilities that we're now seeing in concentrates compared to, say, 2 or 3 years ago has improved substantially. And that again will be a big driver of value for these projects. And that's largely just because there's a shortage of particularly copper concentrates in the world. So all the refineries and the processors are very hungry for new sources of base and precious metal concentrates. So
this
look,
project itself, it's a copper gold project, if I'm not mistaken.
This is actually just a gold project at Wapolu, Mike. Gameta's gold and a little bit of silver. The copper gold is actually the other is Feni, which we can get to in a minute.
Oh, not a problem. I jumped ahead on you. I apologize.
Yeah, no, it's all right. So look, where we're at with those Ferguson projects, we're in the permitting phase. We're about to submit mining lease application documents, environment permit documents, and we're expecting to get out of that permitting phase again because it's a restart of a brownfield. I wouldn't say that this timeline is achievable if it was a pure greenfield, but we're expecting to get out of that in about 6 months. And then in parallel to that, our joint venture partners have committed to start to place orders. We'll be on the ground constructing. All the materials will be bought, and we would expect, given that's a relatively small scale, we're only talking about 300,000 ROM tonnes a year, to be up and running by the beginning of Q4 next year, 2026. In parallel to that, we will also undertake an additional both infill, mostly for conversion of inferred to indicated resources at Gameta, but also some extensional drilling to build out the resource. So we'll also have some news flow, not only on the development of Wapolu as we progress and progressively de-risk, but also on the drill program at Gameta, and then we would be looking to put Gameta into the permitting process by around about May next year. So Gameta shouldn't be more than 12 to maximum 18 months behind Wapolu in terms of its development and turning the switch on.
That's remarkable that you've got two projects fairly close to each other that are moving in tandem. Now, Gameta, is that also a joint venture? And if so, is it with the same partner?
Yep, it's under the same joint venture structure. From a kind of a corporate perspective, the way Adyton is structured, we've obviously got the headco, which is the list co on the Toronto Ventures Exchange. That company then 100% owns two subsidiary private companies. One's called Adyton Exploration, which is a Singaporean registered company. That company then owns those projects. So the JV is at the Singaporean subsidiary level. And then we have another pillar, which is Adyton owning an Australian company, which then owns the other project, which I haven't spoken about yet, which is the Feni Island project. So it stands as 100% owned by Adyton shareholders, the Feni Island project.
Wonderful. So these two projects could be up and both be generating cash flow here within the next couple of years, is what I'm hearing.
Oh, look, absolutely. I mean, we're pretty bullish about getting Wapolu up and running, effectively under 12 months from now. Joint venture partner's been a wonderful group to deal with. They're a Chinese-Singaporean group. We've got a great relationship with them. They're real doers. Their work ethic is just extraordinary when I compare them to perhaps some of my own folk over here, without being too rude about things. But their work ethics are amazing. They're wonderful simplifiers. It's actually been a breath of fresh air working with them.
Wonderful. Let's move on to the Feni project. It's not on the same island, and as you mentioned, I believe you said it was a copper silver project.
No, it's a gold copper project, Mike, and you're right. It's not on the same island. So, geographically, I guess what's really interesting about Feni and why it's a tenement that we've had a lot of interest in is it sits in what they call the Tanga, Tabar, Lihir, Feni Island chain. I know that's a mouthful. So the notable projects in that island chain are the Simberi operation, which is an operating mine today, about an 8 million ounce resource. As you go southeast from Simberi, you get to Lihir. Lihir, I think, is pretty much a household name for people that follow the precious metals industry. Now, formerly operated by Newcrest and now Newmont, since Newmont took Newcrest over. 87 million ounce resource, producing about 700,000 ounces a year. Arguably one of the world's greatest gold discoveries. If you then move about another 70 to 80 kilometres southeast, you get to our project, Fenny Island. And then if you continue southeast, you get to Bougainville and Panguna. So, if you kind of believe in the merits of neurology, or if you want to find elephants, you've got to go where elephants are found. We are in a discovery belt that has no peers globally. There's about 120 million ounces of gold discoveries that have all been brought into production in that island chain, and that's what gives us huge confidence that Feni will deliver a large-scale resource. It's currently just under 1.5 million ounces. We've been drilling at Feni since early March. We've had 2 diamond drill rigs operating 24/7. Initially focused on some confirmatory holes of some of the historical drilling, and now starting to step out, and then potentially looking at some nearby deposits to the Kabang deposit, or whether we describe them as nearby or they're extensions. Time will tell with further drill results. But we're very optimistic that Feni will yield a large-scale potential tier 1 opportunity. I'm not here for a minute suggesting it's going to be another 87 million ounce opportunity on the balance of probabilities. That's unlikely. But even if we're 10% of the size of Lihir and we end up with 8 million ounces, that would be an amazing outcome. And I think the other point about Feni, which we did touch on, which is slightly different to Lihir. Lihir is pretty much a pure gold project, very rich. We're seeing quite a lot of copper in our system, so our system is probably a little bit hotter than Lihir, and we are getting some copper credits coming through. I don't expect copper is likely to become the dominant payable mineral, but it certainly will be a significant contributor to the payability.
Yeah, in those situations, all your OPEX gets applied to the cost of gold. So whatever copper is there is essentially it's free money because there's no OPEX attributable to it.
Yeah, correct. Absolutely. And we've had some of the best copper intercepts we've seen in Adyton's drill program was a drill hole we did in 2021, 80K4, where we intercepted 6.5 metres of 5.2% copper with some sub-intercepts of that of up to 14%, within a broader 85-metre halo of 0.5%. So, I memean, that's substantial, and that's all coming with about 1 gram gold, you know. So, you do the numbers on the payability of that, and it, you know, if we can repeat a few holes like that, or even if they're half as good as that, it bodes well for the project. But the challenge we have, Mike, at Fenny, is the ore body is under cover. It's under a post-mineral cover. Most of the mineralisation event was about 500 million years ago, albeit it would still be mineralising now because it is geothermally active. But post that event, there was a subsequent volcano that put some cover over the ore body. So we're drilling without much surface expression of the mineralisation. There is some surface expression where there is no cover, but typically we're dealing with covers up to, you know, probably average depth 45, 50 metres, maximum depth up to 90, and then other parts to 0 where you do have expression of the ore body. But drilling undercover does add a few additional challenges because you can't see at surface where the fluid flows might have been by you know, surface sampling, anomalous surface sampling. So that's one of the challenges we're facing there. It's likely here it's also geothermally active, so we do all our drilling to a geothermal, not a full geothermal standard, but certainly all our drill rigs have blowout protection. But that's actually, albeit it adds a little bit of cost to drilling, as a mine developer to then be able to potentially build your energy infrastructure from geothermal energy, which is what Lihir did, I would say in a decarbonising world is a hugely value accretive and a big tick for the future development of this project, which isn't well understood.
Yeah. Now, in comparison to this project to the other two, the other two projects are going to essentially become mines within, you know, the next 12 months. Where are you in the lifespan of this particular project?
Yeah, look, I think you know, Fenny's kind of what I'd call an early to mid stage exploration opportunity. You know, as I said, we've got about 1.5 million ounces pre this drill campaign, so that doesn't account for any of the expansion of the resource that we would be very, very confident will happen as a result of this campaign, because we have drilled and hit very good intercepts outside of the current block model. So that, in combination with the confirmatory drilling, we would expect that a future mineral resource estimate update would do two things for us. One, we would see quite a substantial conversion from inferred to indicated, and two, we would see an extension of the inferred. Now, I guess our view at the moment is to probably continue to drill for 6 to 12 months, and look to grow out the ore body, Mike, before then kind of making decisions about, okay, is this now ready to take into a PEA and the development cycle. I think we would wait to be further informed by the upcoming drill results and the extensions to the ore body before making that decision. I think at the moment it's unlikely we would go and rush to a mineral resource update inside of 6 months, potentially kind of middle of next year, third quarter next year. We might put an MRE out and potentially then move to a PEA. But at this stage, our strategy would be just to continue to drill, continue to build out this ore body with the aim to demonstrate that we've got an opportunity here, or directionally we can see that this can grow to, a plus 5 million ounce opportunity. That would be our short to medium term objective.
Okay. Now, with the other two projects going into production soon with the joint venture, I'm going to guess this is going to give you cash flow to fund the drilling on Feni and help with the stock dilution going forward.
Yeah, absolutely, Mike. I mean, that was the strategy, and still remains the strategy. As a junior company with three projects, it's really difficult to be able to excite the investor community enough to be able to fund all three. You've normally got to pick one and run with it, but we're in an enviable position where all our projects are advancing. They're all being funded. And you're spot on with your comment. The strategy from day one was let's get a solution that enables us to get into cash flow at our most advanced assets. They may not be the biggest or going to be the next Lahirs or Porgers, but they're shallow, easy to develop, easy to access with very, very supportive landowners. Let's get those into cash flow. We can then start to potentially sweep some of those cash flows across to the continued development of Feni, and as you said, without having to tap the market for ongoing financing, diluted financing. So that's absolutely the strategy, and as long as we can deliver Wapolu in the timeline that I'm talking about, that strategy is alive and real right now, because I've basically got about 2 years of runway of cash based on the financing we did a couple of months ago. There's about 20 million equivalent Australian in our bank account, which will carry us through past that cash flow position from Wapolu, and then we can potentially start bringing cash in from that asset to continue the ongoing development at Feni.
Outstanding. The Adyton story is like a golden crown, and it's got 3 points to it. If people want to follow this story, and I recommend they do, because there's not quite that many of these types of stories out there where mining is going to fund exploration. How would they do so, Tim?
We have our website, so you can follow our website there. You can follow us on LinkedIn. You can follow us on Twitter. Contact us through our website contact details, and we can add you to our MailChimp mailing list, and then you'll get regular updates directly from the company. Obviously, you can read our press releases, which are public disclosures anyway, and as we move forward, we'll be doing a lot more public, I guess, awareness of the company. I'm in Australia, but we'll be travelling to Canada and doing a lot more, I guess, investor relations awareness. Things like this, Mike, what you're doing, which was great to help us get awareness of the company as well.
Yeah, I look forward to your next trip to Canada, so we can see each other in the same room instead of over the computer. Tim, thank you very much today for the update and to introduce our listeners to this great opportunity in Papua New Guinea.
Yeah, thanks, Michael. Thanks for having me.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.